All right. Hello, everybody. I'm glad to, let me see here on the chat. Kenneth, Shante, Haraya. Awesome. So we got 31 people here and 3 of you are doing great. Awesome. I hope the rest of you are doing just as good though. Awesome. I'm going to be asking some questions and doing a little bit of class participation. The best way to learn is to do the thing. So I don't know if I have any teachers here. I'm not a teacher, but that's what my teacher used to say. Whenever I did pay attention, I would hear stuff like that. But all right, let's see. All right. All right. Do me a favor, everyone, please. If you can see this heart monitor thing on my screen, let me know. Type a 1 in the chat if you can see this crazy Christmas decoration on my screen, whatever this is. Awesome. Great. So I'm assuming also with that you can hear me clearly. Marlo, raise your hand. I'm lowering your hand. If you do have any questions, I don't want to, you can type them as we go. I have the chat open on another screen and I'll try to answer them. This is a beginner's class. So anyway, so a lot of you guys know me already. I'm Miguel. I'm the guy that's always bothering Shante and Dr. K and everybody else. But I mean well, and I've been trading for a while now and, you know, like more than a day. And they asked me to do a little training on support and resistance. So I'm going to do some basic work. I know there's a lot of new people, and that's awesome. A lot of people waking up, understanding the power of trading. So welcome everybody who's new. A lot of you probably are wondering who this crazy person is. You'll get to know me by force, so don't worry about it. So Marlo, don't worry, don't say sorry, it's so good. It's so good this time. All right, so what we're gonna talk about today is support and resistance. I know Shante had posted that before we started this training. She wanted everyone to go through the academy and watched everything related to this on series 100 and 200. Put a 2 in the chat if you did that. Honestly, nobody knows if you're telling through the line, so I'm just trusting you that you have. Put a 2 in the chat if you've watched series 100 and 200, anything related to support and resistance. Okay, great. We're not gonna go over any of that. So I'm glad you guys went over that stuff. That's awesome. So I'm going to kind of like explain it in the way that I do it, the way that it works for me, and the way that gets me paid, right? So there are a lot of educators. I am not one of the academy educators. I'm just someone that asked to do this. And I'm gonna show you what I do is very simple. I'm prior military. We have currently watching, awesome. I'm prior military, I was in the Army for 10 years and we had this acronym even when I used to play sports, and we had it in the military, which is KISS, you know, keep it super simple. There are other ways to say it. So we say keep it super simple, right? Simple works. So support and resistance. Give me 1 quick second here, I'm sorry. We'll move some stuff out of my way. I changed my entire layout and I don't know what anything is. There it goes. All right. So we all know what support and resistance is. Sometimes you'll see people use the acronym SR, support and resistance. Maybe you've heard it called something else. So let me clear this screen here so it's not too crazy looking. I'm just going to use euro dollar. It's a very popular pair. So I have 1,000 pairs on here because I was testing some stuff in the market. All right. Let me ask everyone a quick question about support and resistance. Type a 1 in the chat if you use candles when you are looking for support and resistance, type a 2 in the chat if you are the type that uses the line option when you are setting up your support and resistance. Either one is fine. Either one is fine. You'll find a tug of war. If you ask 100 traders, you're gonna get a mixed feelings of it all. Both? Okay, cool, yeah, that's good. So the reason why I use the line mostly is to eliminate wicks. So do we understand, type of 1 in the chat if you understand, we have a lot of ones, let's do a 3. Type about 3 in the chat if you understand where a candle closes, where it opens and closes, and the difference between where the candle opens and closes and what the wick means. Type a 3 in the chat if you know the difference. You know where the price stops, you know what the candle closes when the candle opens, and that the wick means the higher or the lower of the price, or the actual body of the candle means what it means. Awesome. I don't ever draw all my stuff, so. Okay, so we all know when we look at a candle, we got the open and closes, the base of the candle, and the wicks just give you the highs and the lows as well. So this is what we're going to do. I'm going to use the candle, I'm going to use the regular candles first here. All right, so I use the top-down analysis, right? You guys have heard about the top-down analysis, starting from the higher time frames and work your way down. Type of 1 in the chat if you've heard about the top-down analysis, or using the higher time frames. You can go as high as you want to. I'm going to go from day, right? So all this stuff varies. If you're looking for swing trades, if you're looking for intraday trading, if you're looking for scalps in the market, it all varies, right? It all varies. Every trader is going to do it a little bit different. I'll give you an example. I can take a line, change it white. I can take this line and I can just guess. I'm not testing anything, but I can just say, okay, cool. I'm going to put a line right here, right? Because there's some relevancy between here and here, right? Another trader might say, well, you know what? There's more of a bulk here, so I'm going to go ahead and put a line here, right? But it doesn't matter. What we're looking for is support and resistance. We're looking for zones, right? Because we understand that zones or support and resistance areas, they are not always respected, but what we're looking for is, a higher probability of where price could possibly reject from or move from. So what we're looking for is a general area, and where in history has it been touched the most, to kind of let us know the higher probability of where it's going, right? So me personally, if I'm gonna scalp, I go for, like, example, the 15-minute. If I'm going to scalp and I'm focused on just the last bit of information on the market, if the market's moving really nicely, it's a lot of value in the market, I might use this feature right here. If you open up the window, it's the rectangle. And I might do something like this to kind of give me a zone, right? Roughly a zone right here, right? Support resistance. If I'm using the higher time frames, if I'm doing back testing, or if I'm studying the past, then I'll just go ahead and use horizontal lines. Say I'm looking at this zone right here, the support resistance area right here. I might just go ahead and take 2 lines and put them side by side. I understand I'm doing this on the day chart right here. And a lot of you will know by now that a candle, for example, in the day chart, you see one candle, but as you go down your time frames, you know, this for the newer people, you should know that there are, you know, picture in your mind a bunch of little candles inside the big candles. So inside this candle, there are a bunch of 4-hour candles, and then a bunch of 1-hour candle, 2-hour candle, etc. Right, all the way down. And so like right now, it looks like this, and this line, there's a lot of room between these two lines right here. So if I were to go down to like the hour, for example, you see how much bigger it got? Because that day chart, that day, each candle signifies whatever time frame you're on. If I'm on the day, if I'm on the hour chart, each one of these candles is an hour. If I'm on the day chart, each one of the candles is a day that went by to form that candle. So what I do when I mark up from the top down, when I'm looking for support and resistance, someone type in the chat real quick what your definition of support and, you know what, as a matter of fact, never mind, hold on a second. Someone who is newer, I don't know if I can unmute you guys, let me see. If somebody wants to unmute one person and tell me what your definition of support and resistance is. What do you understand support and resistance is?
Hey Miguel, can you hear me?
Yeah, I can hear you.
I understand that support is the floor and the resistance is the ceiling.
Okay, good. That's good. Yeah. So that's exactly, you know, what it is. Is where price visits and where it tries to go to, depending on if the buyers have the market or if the sellers have the market, right? We'll know if that support or resistance is going to be respected or if it's going to be broken. It doesn't mean because it gets broken one time that it's not going to hold in the future. It just means for that time. It could be a lot of variables like news, you know, something that market crashes for whatever reason. So we know that the support is a horizontal line where the buyers overcome the sellers, right? So if the sellers are moving the markets down, then buyers start to overcome the sellers and the trend starts to reverse, right? So what it's doing is pushing the trend back, you know, back up in the direction from where it came. And resistance, it's found above support. Let me put a line here. So resistance found above support. I'm going to use white for the date chart here. Just going to put 2 on here. All right. All right. So we know that I mentioned earlier that, you know, support and resistance is not an exact science, right? So we know that there are a lot of fake outs. We know that, you know, institutional money, big banks, they can do whatever they want. And, you know, this could historically be respected, you know, for 6 months. And then you have a high confidence, high probability that this right here, like the way right now it touched, it went up. And if you look historically, you know, you might find out, like, yeah, that always happens, you know, and then one day you increase your lot size and it goes the opposite way. That's something that happens a lot. That can happen, not necessarily a lot, but all right. So we're gonna go ahead and use white here for the dates, right? So what we're gonna do is I'm gonna zoom out so I can get an overview of what the market is. This is day chart. So if you're a swing trader, you're gonna be using this a lot. Okay. So I'm going to give you a general, you know, support resistance zone where I want to know where the market kind of is moving, what the market is respecting. And then what I'm going to do after I mark up however many zones I want to mark up, you know, these are day charts. So a lot of these lines you're not going to be able to see on other times. All right. All right, so we're going to say these white lines, excuse me, signify support and resistance for the day chart. And then what I'm going to do is when I'm marking up, doing the top-down analysis, I'm going to drop down to the 4-hour chart. And then within the lower time frame, there are going to be other supports and resistance, right? So we all know that the market moves in waves. So within a higher time frame support and resistance, there's going to be other supports and resistance. You know, the higher the time frame you go, typically the stronger that support and resistance is. Unless something major, absolutely major changes the trend completely. Like if you guys trade indices, you will see that lately there has been like no respect in the market when it comes down to indices. So a lot of these calls that you might think are sour or they called the wrong thing, that the market has just been there has a lot of variables in the market, but that's just not been behaving the way it normally does. Plus in the summer months it just acts up that way. But so what we're gonna do is we're gonna change the color. What I do is I change the color. You can also change like what your line looks like. So I'm gonna go ahead and use yellow for the 4-hour chart. So normally I will have like a little, I'll write on the line itself, I'll write, for example, let's mark this up and say that this right here, one of those zones. This is your 4-hour right here. In my mind, I already know my yellows mean one thing, white mean one thing, but you guys can literally just your own text on here and tell you, as a reminder of what each line is, or you can just write it. That's what each one means. Somebody, go ahead and needs to get muted. Go ahead and mute yourself. There you go. All right, perfect. All right. So yeah, so this is like the most boring part about doing your top-down analysis. Is just a time-consuming part of just looking for your zone. So normally I'll just mark up general area. You don't have to mark like every single individual one. You could, but you don't have to do that. Do it like that. I'm just marking a few, just to give an examples. So what I'm looking are for points in the market where I think price could reverse or pivot from. And then I'm gonna do the 1 hour and the 15-minute, and then that's it. So I'm gonna go ahead and change this to green. All right. One good exercise that I would recommend for everybody to do when you want to learn about support and resistance, or why a certain educator called a play or called a trade idea, would be to plot these points that they give you on a chart. Type of one in the chat if you ever do that. If you ever take an educator's call and you actually plot them so that you can look and see why are they calling that trade. If you're just taking signals, or not signals, trade ideas, just to take trade ideas, it's fine. You can do that. Absolutely. Maybe you're a busy person and you just don't have time. But I recommend that if, Dr. K or anyone else calls a London payout trade, or if you take trades for anybody on Go Live, I recommend you actually take those numbers and you plot them up and you look and you see, okay, why did they call it here and not here? And then you understand, okay, there was some consolidation right here, and then there was a breakout, and then the price went up, right? That's a whole other class for trading breakouts. I don't know if anybody trades breakouts, but I like trading breakouts. We're gonna go jump to the last one here, to the 15, the scalper's way for the 15-minute chart. I love trading indices on this one right here in the hour. So I'm gonna change this color to blue. And again, all I'm doing in all of them, all I'm doing is exactly the same thing. I'm looking for any points, any periods in which the price could potentially turn based on what's happened in the past. Okay. So I'm gonna leave it, mark one more here. I'm gonna come back later and look at Euro USD because I'm liking the way it's looking right now. All right. So when I'm looking at my zones or my support and resistance, not only am I looking into the past to see where they have been, I'm also looking to see how it was trending at the time, and then while it was, or where it was consolidating, so that when it's consolidating, I know where the market was pushing. So for example, I just saw something right here that was a great example I wanted to talk about. This right here, this little 15-minute consolidation zone, all these candles are all 15 minutes, right? So you would take your support resistance lines and you would check to see where this Euro USD specific pair would break out of. Now, I mentioned earlier about trading zones or price action, or also you probably have heard it reversed or referred to as boxing in the price. A lot of people would mark this support resistance, and then they will see that I tested so many times and it would fall, right? And then what they would find themselves trapped in is that they will put a sell. This right here would fake out, and then it would go up. What's wrong with my mouse? Sorry, new mouse. Why are you clicking like that? Excuse me. Wow. There you go. Okay. All right, there you go. All right, here we go. So I'm gonna go ahead and delete these drawings. I'm gonna mark up a specific zone on this Euro USD, and I want somebody to tell me where they would think this trade will go potentially based on the support and resistance and based on how many times that support resistance zone was tested. So right here, for example, on this 15-minute chart, you can, just by your naked eye, you can see where the resistance and support and resistance has been on this chart. So if I take this, let me use my rectangle here. If I take this and I mark this up, all right, we see that there's history here all the way from the 8th of July. So all week long, every time that has reached this level, it reached this level, eventually it broke through and it came back down. And so based on the support and resistance, so there are more variables that would dictate if this is going to drop or fall. We could look for things like, your higher highs, higher lows, your head and shoulders, all that stuff. But based on your support and resistance alone, based on the strength of the past and based on where it's now, the market's trying to trend up again, right? It could be anybody's guess, of course, but based on history, where do you think this pair is trying to head to? Do you think this pair is trying to drop? Or do you think this pair is trying to climb, and why? Oh, you're placing your support and resistance where the candle starts, not the wick. All right, so the reason why I place my support and resistance where the candle closes, where the price closes, the last price, and not the wick. One really good example of that is, when you are giving a trade idea and they tell you, or pick your own stop loss, or they give you a stop loss. The stop loss, when I give somebody a stop loss, is because I'm looking to see in the past where the price has whipped to after the candle stopped and closed. And I try to keep the stop loss, on average, a little bit away from where it typically wicks to before it reverses back down. We've all experienced when we go into a trade, it goes in the opposite direction for a little while before it comes back down. And a lot of times it'll knock you off the trade and then head in the other direction, and you're frustrated, like, it happens all the time. Oh my God, I don't get this. So those wicks do that, right? So those wicks can either serve a purpose of filling up a gap. Some of you probably heard of the moving, it moves 30, 50% to cover an area, or they're just looking for, you know, your stop losses before they actually move in a direction. Has anybody, type it in the chat if you've experienced this before, where it wicked your stop loss and then it continued to go in the direction where you wanted it to go initially. All right, so we've all experienced this in the past. All right, only me and Angela have experienced this in the past. All right, so the reason why the true price of the candle, it's where it closes. That's the true price. The highest and the lowest are the wicks. You know, when you see the high and low, those are your wicks. All right. Does that make sense? What I just explained right now, why I mark up. I believe Dr. K, when she uses her Fibonacci, if I'm not mistaken, I have to calibrate this one, but you'll see her, you know, she doesn't, I think it's Dr. K, she doesn't go from the wick itself, you know, she goes from the actual candle itself. Because what you're looking for like a high probability trade, you know, where more than not more, there are more chances for it to go to than not. Riona, yes, okay. So that's why I placed my support and resistance on the candle. You can that'll also help you if you set up your support and resistance. So I'm gonna put a white. If you set up your support and resistance, say for example right here, right, just to give an example, right here at the top and bottom of this candle, and if I go and I click on line, you see where the line is. The line, it's taken away the wicks. So all these little curves you see, that's all your candles. All the little curves, those twists, those are your candles. Okay. Yeah. You guys seeing that? If you go on your line, it'll help you better understand like where the actual candle itself is instead of the wick. Type a 3 in the chat if you already knew that that's what the line chart does to better understand the candle. If you already knew about the line and what it does. All right, so I personally mark up all my zones. So on, who uses, well, all of you use the web analyzer, right? We all use the web analyzer. Let me do something here. If you're using the web analyzer as it should, let me see if it comes up, and I'm gonna show you guys something that I'm sure a lot of you guys already knew. Oh, there you go. But you know, to kind of get the same effect that you're getting with the line, if you want to look at like past zones and potential places, like support resistance places, like the genius move that Dr. Kathy did with using this and teaching you guys about this little special green line right here. So if you go here on the Ichimoku settings, you can check out all this stuff and just leave your lagging span. And that will help you tremendously to get a gist of where price could potentially go to next. So when she says, if you're gonna go for 10 pips, for example, all right, so you're gonna go for 10 pips. So let's say you got jumped into this trade right here and it went up and you were like, oh, well, where can it possibly go to? And you look at all the little spikes on the lagging span, right? All the support and resistance, right? So the spike, the pointy part, it's touching a resistance. right? It hit something and it knocked it down. With a spike, it hit something and it knocked it down. You get it? Same thing with the spike. It hit a support somewhere. It hit something and it went back up. It hit something, it rejected it, and it went back up. That's what that is. So in this case, if you're looking, okay, so I got into the market right here. Wow, this new mouse, I'm about to return this new mouse. I clicked like 18 times. All right, so I go, okay, well, what could price potentially, like me personally, I would set one of my TPs like right here. If I'm just looking to look at the chart and wait for it to hit, I might set it up there. You might have some people that might set it up in other places where it touches, like right here, you know? So just if you want to, depending on the time frame, me personally, I would set it up here. So like you can come here on this side and you got a bunch of options. These all measure something in the market. So this one right here, if I go from my entry point and I drag it up, that entry that I said I will go to, you get your 10 pips right there. These are the 10 pips that Dr. Kathy always talks about, 10 pips on dip. So that right there is a pretty strong, SR, support resistance location. So I will set up my TP right there. Right now, it's up to you. You can take your 10 pips and you can get out, based on that support resistance level right there. Or you could set your stop loss into profit and you can let it ride because there's another potential zone right here. And then there's another potential zone right here. Right? Put a 2 in the chat if you knew that information already based on what you saw in the academy or what Dr. Kathy has taught you guys already. If you knew about taking off all the other indicators and just leaving this by itself, if you think, if you're looking at it and you're like, it's too messy, and you can always do what she does all the time. She turns off all these things and gives you a clear view. All of these indicators work together to tell a story, how the market is moving. Ichimoku Cloud, if you guys Google it, is one of the top 5 most used indicators in the entire world, not just by retail traders, but also by big bank institutions and everybody and their mama. It's a very, very important indicator. All right, so only, is this Natasha or not? I didn't know you. I'm sorry. So she's the only one. Is it a she? You're the only one that knew about this. Nobody else. Okay.
Oh, sorry. You mean the Ichimoku Cloud, the line? Sorry, the money line. What do they call it?
Yeah, the money line span. Yeah.
Yeah, but I think it is taught though.
It is. Yeah, I'm trying to see who knew about it, who's seen it, who heard about it. Yeah. A bunch of people said they went through Series 100 and 200 plus through the case training, so I know they've heard it. It's very important to know that alone, following that alone with this Ichimoku Cloud will make you a lot of money if you pay attention.
Yeah, Teresa mentions it in her training on Wednesday.
Yeah, I'm sure she does. Yeah. Teresa is absolutely phenomenal.
Yeah.
Absolutely a great trader. Yeah.
Yeah, that's how I find out about it, but they don't teach it on Go Live. I've never seen it on Go Live. Yeah, I mean in the cloud. I mean the money cloud, whatever the.
Yeah. Other educators use the Ichimoku Cloud. They have like their own version and settings for it. They all serve a purpose, and but they do the same thing. So I don't know if they explained it the way she explains it, but the way she explains it is the perfect right way for me. So what I was doing over here with setting up all these lines for support and resistance on each individual time period, it's the same thing that you do with the lagging span. It's pretty much doing it for you already by just looking at it. You know, I believe it means, like Dr. Katz says, it means one glance. You should be able to just look, and as soon as you see these little peaks, you already know that there's some action happening there. So if your trade is moving, you know that it's going to move, and it might kind of hesitate a little bit right here, and it's going to move, and it might hesitate a little bit here. Same thing, same thing, same thing. Of course, you will see like runaway candles. You know, candles are just engulfing candles. You'll see engulfing candles. There's a news come out, huge volume comes into the market, and it just breaks right through, right? There are no guarantees, zero guarantees that all prices, right? Because candles indicate pricing. There's zero guarantee that the market is going to respect those supports and resistance. They're just, you know, we're looking for high probability trades. So it just means that has been respected in the past for X and Y reason, and you know, based on historical data, they are, you know, more than likely they're going to be respected again. But it doesn't mean that the whole purpose of stop loss, for example, especially if you're a newer trader, especially if you don't have the type of account that can handle an entire swing trade, that's the purpose of the stop loss, because they're not 100%. All, you know, in my history of trading, you know, 9 times out of 10, price is going to return to its original period, but you don't know how long that's going to take. You know, it could literally drop or go up and then consolidate for days, weeks, months, years. It could just do that, and eventually it'll swing all the way to wherever, you know, it was in the past. It's going to revisit its past price. Is going to revisit it at some point in time, you know, for the most part. But you don't want to risk that if you don't have, you know, if you're playing with money that you shouldn't be playing with, you should not be not using a stop loss. I know Dr. Kathy, a lot of times she says she's not using a stop loss for something. But if you don't have that kind of account, don't play. If you don't know what you're doing or looking for, you don't know how to hedge in the market, don't do that. Do you guys have any questions so far? Or any more questions? If the money line, I'll stop. Oh, there you go. Somebody answer that. So that will be Dr. Kathy's YouTube channel. I'm going to post that here on the chat right now. Like I said, other educators do use a version of the Ichimoku Cloud. They have the lagging span on it. They might be referring to it in a different way, but they do use it, so they may have mentioned it. But if you're watching a lot of Go Live recorded sessions, you'll see Dr. Kathy's recorded sessions on there, and she talks about it all the time. Do you do your top-down draw, plot your charts daily, or just on like a weekend when the market is closed? I do both. It depends on how the market is moving or it's behaving, or if I'm looking ahead of time. If I see there are news coming for the next following week, me personally, I trade the news. So I'll go ahead and I'll plot those support resistance zones on that pair that might be affected based on the news. I don't know if it's gonna go up or down. So just to kind of be preemptive, I'll mark up the chart ahead of time so that I know. But a lot of times whenever I'm trading or day trading or scalping during the day or night or whatever, in whatever trading period, I'm just looking at what the market, if I'm using the Ichimoku Cloud, I'm literally just looking at the lagging span and I'm trading based on what happened in the past. So like I mentioned here, from here to there was, you know, your 10 pips. So I'm putting my lot size, I'm taking my 10 pips, I'm seeing there's another entry, and then I'll go ahead and get into it, or I'll just swap to another pair and keep doing that if I'm using this specific strategy here. If I miss a pair that I think might be affected by the news, I might go in into the chart and I might box in some zones. I'll take a little rectangle here, and I might take, for example, I don't know, right here. Let's say this was a little consolidation right here. So I might come in here like this, and I might box this in, and then, you know, I might set up an alert above or below, letting me know that I broke out of the box. But I wouldn't get into the trade until it broke out and close, like right here. You notice that it broke out. I wouldn't get out there because that could break out, fake you out, and drop. So I will wait for that price to happen the way it did with this candle, to open above and outside of my personal zone. So you see right here, it hit, it came down. So all this right here, in my mind, I'm imagining an entire zone right here, an entire support resistance line right here. So I will wait till it break this zone to get into the trade. But I will do that if I'm just kind of trading in the moment. But if I'm trading for the future, yeah, I'm plotting it out. I might box some areas that I think are critical and set my alerts on TradingView. But mainly, if I'm just trading during the day, I'm just doing it kind of like this. I'm not boxing anything, because literally the Ichimoku cloud is just telling me everything. It's telling me what to do, what to expect, and I'll just respect it, you know. So yeah, that's what I do. Hopefully that answered your question. I haven't been marking up cryptocurrency lately. I'm going to be looking into it with the Ichimoku cloud as well, because there are some news for Bitcoin. Something big might be coming. So stay tuned for that. If you guys have Crypto Picasso as well, the DCX educators for cryptocurrency, keep an eye out for that. Look, study the cloud, look into Bitcoin. That's just my personal opinion. Side note, something big might be coming for that. I don't know if you guys are trading crypto, but be very careful and jump into crypto blindfolded. Treat it with the same respect you would give it to indices. Any other questions as far as anything related to support and resistance? Okay, hopefully I didn't confuse you guys anymore. If you were confused already. So if there are no more questions, if you do have a question, drop it in the chat or unmute yourself. If not, I'll give it like 2 more minutes and then we'll call it a night or day, an evening. I don't know where in the world you guys are calling from, but I thank everybody for being here. Support resistance, it's such a basic thing. Like, it's literally Forex basics. In all reality, you know, I could tell you what support and resistance is in about 5 minutes or less, because it's so easy. But like the cheat sheet, the ECC is ECC 11. It's literally a perfect cheat sheet for support resistance, because it's telling you, it's telling you, its lagging span is literally telling you where all those pivot points are. It's telling you all those pivot points are. It's telling you all those support and resistance are. It's 100%. I'm really big into, you know, trading naked charts, but you know, and I use different indicators to kind of like see if other indicators are correlating. But yeah, the ECC 11, it's, you know, a 10-year-old kid can tell you what the support and resistance is with this. You just follow that lagging span, just trust it, demo it forever. If you demo more than you actually trade live, you're gonna make even more money than somebody that thinks they know what they're doing already and goes live every time, every single time. So if there are no more questions or anything.
Yeah, I have a question. Sorry, I would write it in the chat, but it's kind of a little bit hard to write it in the chat.
Okay.
Yeah, regarding the lagging line, I find that sometimes I try to, you know, when I'm going for the 10 pips, I use the lagging line to try and see where the price is going, you know, where price is going to go on the 15 and the 5 minutes. And sometimes, you know, you can't find it, you know, so I go to the hour. And it's like, what is your like opinion on it? Because even though you're you know, the 10 pips could happen any time. But it's like sometimes I find trying to find the, you know, the lagging line on the 15 and 5 minutes is very difficult because you have to go back, and you're not seeing any of where it may go. You know what I mean? Does that make sense?
100%.
Yeah.
Something I would do, if you're having trouble with identifying where the past has been for support and resistance as far as lagging span on the smaller time frames, then just zoom out. What I would recommend is for you to zoom out and take these lines. If you're having a hard time locating them, find the pivot points and drop a line on it. And then now you know when you come back into your chart, you know that that line represents at some point a pivot point or support resistance point. You can use a different color for support, a different color for resistance, so that when you are going for your buy or your sells, you know where your support and your resistance potential is coming from, or could potentially come from when you go for your 10 pips and whatnot. So if you are if you're going for 10 pips, 20 pips, depending on your time frame, if you're doing 15, then you're typically going for 10 pips. Then you know, for example, we mentioned here, so this one right here was around 10 pips roughly. So I would have roughly 10 pips. So I personally would have zoomed out. And if it's hard to see, again, click on the little settings wheel here, turn everything off except the lagging span, so that all you see is that green line on top of the candles. If that's still too hard to see, you can always click right here on the drop down, click on line. Now we have only two lines. You have your lagging span and your line, which are pretty much gonna line up. And now you can do your plotting with your support resistance lines. Put them, you know, just about. It's never gonna be an exact science. Concentrate on the green line. That's the line that you're looking for as far as pivot points go, or support, I keep saying pivot points. Your support resistance line. And then once you have marked them all up, then you can go ahead and you know, reactivate your cloud, so you can still see where the trend is going, see where the market's going. You can see your your blue line crossing your red line, etc. And then now you have you're more aware of like, okay, now I'm gonna go ahead and what am I doing? Now I'm gonna go ahead and get into my trades potentially. So yeah, so you would, I love this one right here, so perfect. See these twin candles right here? The history said that there was a pivot point there, and then boom, it was just perfect. It did come down. One last thing I'll mention here that it's not, it's a little, it helps a lot. I make a lot of my my wins with it. It's learn about what divergence is, which basically means when the market's telling you a price is going a certain way, you'll see that the RSI is going another way. That's letting you know, for example, if it's buying, that's letting you know that, hey, yeah, it's buying, but buyers are leaving the market, sellers are about to take over. And usually what that lets you know, for example, if I go right here and I use this trend line, if I use this trend line right here, from this right here, this blue candle, it's a buy candle. So if I mark up the trend upwards, and I match that candle straight down with the RSI right here, and I put a trend line on top of that RSI, and I mark my trend on my RSI, you notice that this is going upwards and this is going downwards. That means that the market was buying, and then it started to lose strength. The buyers started to leave the market. The sellers started coming in. And just the same exact way that the RSI said it would happen, the market went up, and then guess what? Sellers took over. RSI went down, market went down. You guys see that? That's like I call the RSI the snitch, the market snitch. That snitch gets me paid. So TP1, TP2, etc. will be based off the different zones you see. Correct. Yeah. So if you're looking for, your 10 pips, yeah, RSI is very important. Yeah. So if you are looking at the 15 and you're looking to get in the market, let's say you got into the market right here. You see right here, boom, it hit, came down, it hit, came down, it broke, right? So that was a nice resistance zone right here. So what happens is that now it broke, and I was like, cool, if a candle now opens and closes above this, so you might have gotten somewhere in here. So, preferably you would have seen this engulfing, you would have waited for the engulfing candle and then got in, but here, got lucky, got in the market, saw, and got into the market here. At this point, I will look, okay, where is the market gonna go to from that breakout? So I will look historically, if I got in the market here on the yellow, historically, this spike here is telling me that something hit here and made the market drop. So there's something there, all right, roughly there, something roughly there. If you look left, you'll see that there, but if you look here, you'll see that there, right? So it's not gonna be like exact signs right on the dot on the money every time, but if you look to the left, you'll notice that something hit here, right? You see all the wicks, something hit there, see a spike right here, if it went up, it hit something there, went up. So there's something here. There's some resistance somewhere out in the past. It might be in this, look at this right here, boom. So there's something there. That's what the past is telling you, something there. So if I got in on that breakout, my first potential, 10 pips that I might be going for, this right there, that trade would have been somewhere around 20 pips right there. That's that engulfing candle. So typically you're aiming for your 10 pips and dip, but based on historical data, you got on that breakout, and based on your historical data, this point right here, there's something there. So because of this could have been news, they could have been at market open, I don't know. Well, not a market open, but this has happened right after lunchtime. So right after lunchtime, the market opened up, boom, it rallied up. So it was consolidating this whole time. And then right after lunchtime, boom, it took off and did not respect the zone right there. And it pretty much hit other zones, consolidated, went up, respected the zone, consolidated, went up. So at this point, you could have just gone in, putting your stop loss in profit, let it ride up, or you could have just taken your 10, 20 pips, and then you would have been out of the market. Any other questions? The last two people that asked me a question, Tori and Brianna, did I answer your question? Yeah. Like I said, support and resistance is very basic. In reality, we could have done this in the first 15 minutes. It could have been done, but I wanted to kind of give you guys an understanding about the top-down analysis. There's like nothing to support and resistance at all. There's nothing to it whatsoever. So any more questions, you guys can type them or unmute yourself. I'm gonna give you like another minute and then we can call it a day. Just getting off work and Kat can call, is this recorded? It's being recorded, but I'm not sure if it's going to be actually posted. You're gonna have to get with Shantae, message Shantae, and then she'll let you know about the recorded session. If not, you can always, let me send you the link again. You can always go here. This is Dr. Kathy's YouTube channel. There you go. All right, so if that's all, nobody commented or unmuted, so I'm gonna go ahead and say that we're done. I appreciate you guys sticking around. Sorry if this it's not the most interesting subject. I got off a little bit, talked about the RSI and stuff like that. We can do some of that training in the future. That's more entertaining because that's that right there. It's teaching you about the market, it's teaching you about the volume and the difference between the energy in the market between buyers and sellers. So we can do an RSI training in the future as well. If you guys are interested, just let flood Shante up and let her know if you want that to happen in the chats and the apps. So I appreciate you guys. Again, hopefully this wasn't too boring. It is not the most colorful thing to talk about. So thank you guys for being here. We're gonna call it a day. I'm gonna be an opportunist. I'm gonna give you guys my Instagram. If you can follow me, ask me questions on there as well. Thank you guys for showing up. See you guys in the chats. Take care.
Thank you, Miguel. Y'all have the rest of a great evening. Bye-bye.
Thank you. Thank you, Miguel.